Hello everyone, welcome to my channel. I'm so happy, just here to announce some news. Well, for me anyway, the latest update from the United States Investment Championship. I'm among the top ranks. This here, that's me. Actually, when I signed up, it was at the end of February, and now as of today, well, when you're watching this video, it's already the end of May. So in just about 2 months, I've achieved a 104.2% performance. A lot of friends are really interested in knowing how I did it. And actually, after going through a long period of losing money, I really hope I can share with my friends, well, share what kind of conclusions I've come to and how I make my trades. Actually, the reason why my performance improved after what I did is because I realized one concept. In the past, I really believed in my own ideas, like if I thought it would go up or I thought it would go down. But after losing a lot again and again, I realized that trading is actually very simple. You just trade the price action. If you don't trade the price action and instead trade based on your own opinions, you'll never get good results, like here. Like here at the end of March, if you still felt very bearish about the market and kept saying, oh, it will definitely drop, it will definitely fall back to the price level of Liberation Day in April 2025, then I'm sorry, as of today, you're already lagging behind the market by 31%. When I first started studying trading, I realized one thing. Trading is a combination of mathematics and psychology. Ever since I understood this, I have only trusted one thing, the price action. So I only trade the maths, not the noise. I have to discard everything else. After my research, I realized that actually Wall Street has its own logic, and I figured out how to apply that logic when I was trading. I also don't mind, and I even hope to share it with traders of all different levels. Let's make money together. So I developed a few indicators for my own. For now, I have 6 indicators as the ALO indicator suite, and this is my ALO quantitative advantage. What does ALO stand for? It stands for Algorithmic Logic Option. The first one is the ALO Super Trend. This is my macro trend defense and signal filtration tool and my fundamental system. The second one is a backtesting engine, a modular strategy testing with built-in institutional tide filters, fully applicable for both long and short market regimes. The third one is called the Buy the Dip backtest. It's all about being greedy when others are fearful, knowing when to be greedy and when to be fearful. The fourth and fifth ones are related to options. I know that many traders are doing a lot of options trading now, and so do I. This one is about option management. The sixth one down here is a combination of sentiment, RSI, and my own underlying metric, which uses an option volatility engine to calculate when I can go full aggressive to execute the most profitable counter-trend trades. All right, without further delay, let me introduce how I go through each indicator one by one and explain to everyone how I do it. The first thing I can introduce to you is called the ALO Super Trend. As the name suggests, actually, I created a Wall Street style master EMA trend line across weekly, daily, hourly, and minute timeframes at a glance to check this stock currently in an uptrend, a downtrend, or just moving sideways within a range. By seeing the trend in real time and when I can see the risk directly on my indicator, I can do whatever trade I want. For example, when the support or resistance is clear at a certain level, as shown by my EMAs, my chances of winning will be much higher. So I use these two types of lines to distinguish. The first one, as you can see, the smooth line here is actually the daily EMA. For me, I use the green line for 8-day EMA and the red as the 21-day EMA, while the yellow line is the 42-day EMA. These basically represent the 2 weeks, 1 month, and the 42-day is basically 2 months trend. As for why I use these timeframes instead of the commonly used 50-day simple moving average, it's because I prefer React a bit faster. Things change in an instant nowadays. Just one tweet from Donald Trump or whoever from the Fed, and in a second, sigh, the market could drop like rock. For example, this candlestick here on October 10th was when Trump announced new tariffs. I remember at that time, within 5 minutes, the index dropped from the top by 2% all the way down to the level on the 21 EMA. So relatively speaking, when I use daily charts, I feel that I also need to use shorter time frames. And so far for me, this system is very clear. You can see that even when it drops, it does not immediately break through the support. Because a trend doesn't get broken immediately. And what is this dotted thick line? It represents a more long-term trend, which is the weekly chart. The difference here is the 21-week EMA, and this darker one is the 52-week EMA line, which basically means 1-year average price while institutions all look at it. For Wall Street people, sigh. For investment bank experts, these are the main support and resistance levels. When I can clearly see these levels, then I know whether I should go long or short or do nothing and wait for a clearer direction. Or even if I already know how to use all the indicators. Basically, when I look at the moving averages, I know, for example, in this range, you definitely go short here. And when you set up a long position, the probability or the chance of winning is much higher. Later, I will analyze this in more detail, and my system here is also multi-time frame. What does that mean? For example, let's look at these 4 panels of Apple right now. Top left is the daily chart. Over here on the right, it's 130 minutes. 130 minutes, which is equivalent to dividing a trading day into 3 sections equally, because a trading day is 6.5 hours. So how does it work? That means 3 of these bars equal 1 trading day. For the 15-minute chart, what about here for a week? If we go back to the daily chart, what's the difference? My daily chart. It's 8 EMA in green, 21 EMA in red dashed line, and 42 EMA in yellow. And for the weekly chart, it's this one. The red dots and these blue dots actually correspond to what's mentioned on the weekly chart as well. You can see the logic here, and in a moment I'll also explain how the buy and sell signals are generated. You'll also see this line appear in this time frame, and usually when I trade I do it based on this shorter time frame. You can see how Apple fluctuates up and down in this consolidation area between 21 and 52 weekly EMA. You can see it's moving up and down within this range prior to breakout. When it comes to making a move here, if we're talking about volatility contraction, actually both the weekly and daily charts have already started to expand. Usually when I trade, I would buy in at this position. As for my risk, it's actually very easy to measure. If it falls below last year's low on the weekly chart, then my risk is 5%. But as for my upside, it's basically unlimited. Right now, I'm already holding a 20% gain. So when I have this multi-time frame set up, with the chart, it's actually really easy for me to trade. Even if you're a day trader, you know exactly where you need to act. As for this little marker here, I'll explain it later. Now, this greedy flag, that's what I call it, at this position, when it comes back to touch the 8 EMA, it actually gets really strong support, as you can see. All right, it just keeps going. This is the function of my multi-time frame setup. Okay, next, the second thing I want to talk to everyone about is this. I have 2 buying systems. The first one is called super buy and the super sell. What are they? Actually, these super buy and sell signals are a counter trend strategy. It's used when everyone is panicking or in euphoria. After running calculations in the background, including RSI and price action, and option volatility, to calculate whether this trade, as a counter trend, has a high success rate. You can see here, this is QQQ. Oh, that's the MU. So if you had boldly bought in at that time, now before the market opens, it has already risen to 934, which is 138%. I don't even need to buy at the lowest point because this signal here, I can calculate it based on my super trend and my underlying quantitative calculation. That's the first point. And then the second point. The feature here is that the main idea behind normal buy and normal sell is to generate buy and sell signals when the price crosses through the EMAs. Standard buying and selling procedures are a comprehensive trend following strategy and setup, and they also function as a critical point of reference for me, which provides an exceptionally low risk and high probability entry price for my trades. This is AMD. You can see that if you do swing trading, actually, when the sell or buy signal appears, the risk is relatively low. For example, when OpenAI announced that it would form an alliance with AMD, my signal had already appeared before that. On that day, the stock jumped more than 20%, and in the end, it went up to 30%. Also, back in April, when that signal appeared up until today, AMD has already skyrocketed by 130%, while my risk at that time was only about 5% to 10%. So the risk to reward ratio here is unbeatable. In fact, this indicator can also be applied to other, even more volatile assets like Bitcoin. Recently, over the past 6 months, there have actually been a lot of sell signals, especially when it comes to this, mainly at the point of the weekly EMA crossover. The sell signals are also very clear. This is on the daily chart. Even if I use a shorter time frame, say 5 minutes, Even 15 minutes is applicable for me. It's a really good reference, but when this signal appears, whether or not I actually make the trade is something I have to consider myself, because everyone's risk tolerance is different. But now that I've created this tool, it helps me to, well, to look at the price action at the time objectively based on the underlying maths to see what kind of trade is suitable. In addition to what I mentioned earlier regarding the current market trends, actually, I've configured a number of parameters inside to ensure optimal performance. Well, the signals it gives are generally accurate. If someone is very impatient, for example, with this filter I have, my buy signal will only trigger when the weekly MACD is positive, but some people might be very impatient. If you really like to trade every day, then this signal will appear very frequently. But if you only trade it for 3 days, actually the risk to reward probability is still very good. But if you find that this signal is appearing too frequently, then you should take a look. For example, if a period of consolidation has started, even if you make money in 3 days, it might quickly fall back to the EMAs. So you need to check if the ticker or market is having any issues. Are you ready? Yes, Take your profit and get out. And finally, there's one more thing. For beginners who may not have started trading yet, when you're doing paper trading, I also recommend using this filter background to see whether the stock is in an uptrend or a downtrend. Green represents an uptrend and pink represents a downtrend. Let's bring up Micron again as an example. For Netflix, there is a period of time it dropped sharply due to the Warner Brothers deal. Then, when the deal is cancelled, it surged crazily. My EMAs allow everyone to know and study why a particular stock behaves this way. For example, I actually traded this segment, buying at a low point and riding it up to the 21-week EMA. It's precisely because there's a logic behind it on Wall Street. I see why it reaches this point and gets stuck, and then why it drops back down if you have a longer time frame perspective, visual aids like these dotted lines in my ALO super trend. How does it keep rising until it hits that resistance point? So with this super trend, I hope to share it with everyone so you can see that as long as you have patience and know where to set your risk reward ratio, I believe not only I, but actually everyone can do it. All right, just now I finished introducing my ALO super trend, which is basically my own fundamental approach to offense and defense. Now I want to introduce another indicator that helps me verify whether my super trend is actually working or not. This is what's called the ALO super trend backtest. I don't know if you've seen a movie called F1. Brad Pitt stars in it. It's one of my favorites. There's a line in the movie that goes, "Hope is not a strategy." Hope is not a strategy. Anything else, Professor? After I finished making the first indicator, I didn't just want to, well, estimate things. Even if I could calculate it, I want the proof for myself. So what exactly is the probability of winning and profit factor? Because of that, I decided to make another engine myself. I did a backtest myself to verify it, to see for myself whether mathematically it actually holds up. Now let me show you. So in my current presentation, this backtest is calculated from the time this ticker first appeared up to now to see what the situation is. What is the profit factor in my presentation? For now, I'll just treat it as a long trade first because each ticker has a different character and volatility. As for profit taking, just set it when the RSI reaches 65. Some friends prefer to use a stop loss or use an EMA breakdown. Both are fine. Ultimately, it all really depends on whether your specific ticker is high beta and exhibits rapid price movements. Maybe using a stop loss for profit-taking analysis might be a much more suitable approach for your strategy. But what I specifically want to talk about here is if I use my comprehensive supertrend logic framework once again. To apply it and look at what kind of results would appear on some basic indexes, I'll keep it simple. I'll just casually show you that the profit factor for QQQ is 2. For SPY, it goes up a bit more to 3. When applied to the futures market, the results are even better, and the drawdown isn't very large either. When applied to ES, that is the S&P 500 E-mini futures, the profit factor is even better, of course. This is something that's been calculated, but it also gives me confidence when I'm trading in these different markets. I know very clearly when I should go on the offensive camp and when I should play defense. Just open up the super buy and super sell signals. To put it more clearly, I primarily execute my trades based on my own unique logic, and as a direct result of this approach, my performance has been consistently very strong. Even when I trade as boring as RSP, the profit factor is also excellent. This is another ticker, Tesla. The profit factor is at 2 point something, but I want to emphasize that this back test is based on my own risk appetite and my entry points. I am cautious, and when I trade, I measure my risk. I'm not telling everyone to go all in. So if I had been able to make this investment back in 1986, of course my results would have been excellent. So this is hypothetical. I hope everyone understands that if I make an entry based on very low risk, my reward can actually be quite good. Here you are, ASML and Google. All right, for this JV is really dramatic with 400+%, and 30-something% drawdown is actually normal. For an in-play ticker, it's normal for consolidation with 30% after rising 100%. What I want to say to everyone is that as long as you have proper risk management, your returns can actually be very good. And most importantly, you need to have patience. Besides having patience, my system actually has a lot of filters. The reason for that is because when I want to follow smart money and institutional buyers to make trades, I have to minimize as much noise as possible. I only trade the maths. My current buy system requires that the MACD on the weekly chart must be above 0 before I consider buying. This is a double confirmation in a longer time frame for me to pull the trigger. When the buying power or momentum isn't strong, you'll see that the profit factor drops significantly. This ensures that when I make a long trade, institutional buyers and smart money have already started to enter the market gradually. I don't need to buy at the lowest point. I just need to ride the tide and take action. Going with the trend is always better than going against the current, especially in the stock market. This is something I truly understood after paying a lot of tuition fees, so to speak. The most important thing is that I need to dance with the market. When the music is fast, I dance quickly. When the music slows down, I can actually just stand back and observe for a bit, and that's perfectly fine too. These two indicators are ones I created myself. Basically, all my trades depend on them. They are fundamental tools that help me filter opportunities. It's about the overall market direction. And when I'm making a trade, am I standing in the right position? Are institutional buyers also participating at the same time? This way I can avoid guessing too much. After introducing these two indicators to everyone, I'll also talk about other more extreme situations and how I handle them. The risk to reward ratio in those cases are exceptional too. Finally, if you're really interested in my indicators, or if you want to learn more about my trading philosophy, you're welcome to visit my profile page. There's a link there that will take you to my WOP store. I will gradually upload more videos later on. Alternatively, another simple option is that you can just search for the name AloQuant directly on the TradingView platform. I will also gradually update everyone about my observation on market. If you are interested and want to experience exactly how my custom indicator works for yourself, you are more than welcome to join me over there right now. Once you take a look inside, you are going to find incredibly detailed and comprehensive information, as well as a very deep and thorough technical analysis of my other indicators. Thank you all so much for your support. A bit later on, I am planning to create 2 more videos, one specifically about buying the dip, and another one focused on professional option management. Thank you all so much. See you in the next video.